Dumela. I'll be finishing off this paper here. I'll start with financial statements. Wow, it's 80 marks and it will take us 48 minutes, hopefully less than that. So you're provided with the pre-adjustment trial balance of Adventure Outfitters. Adventure Outfitters sells camping gear and hiking equipment. So that's what they're selling, right? So they sell camping gear and hiking equipment. So that will be their sales, right? This is their trading stock. Let me just write it underneath that. So this is their trading stock, right? So that's what they sell in order to generate a profit. They sell it at a higher price. On top of that, they also offer survival skills courses for which they charge a fee. So, can I safely say that they also provide a service? Do you agree with me? So, they provide a service. You with me here? So, they provide a service for which they charge a fee. What do we call that fee that we charge when we have provided service? It has normally three names. What do we call it? You can call it current income. If you don't want to call it current income, you can call it fee income or just a service fee. It's up to you as to what you want to call it. You can call it any of those. In essence, here we are going to have sales and we are also going to have a fee income. And we've got an extract from the pre-adjustment trial balance on the 31st of October 2024. This is the end of the financial year. I refer to it as EOY, end of the year. We still need to determine the beginning of our financial year. We've got vehicles, we've got accumulated depreciation equipment, and accumulated depreciation on equipment, a fixed deposit of 70,000, bank of 100 of 11,220, loan from Honey Bank, it will be 79,500, trading stock will be 291,120, and we've got petty cash worth 3,600. I will start with sales. Sales amount is 1,420,000. Let me see if that has been recorded. Okay, I'm going to prepare the statement of profit or loss. So we need to prepare the statement of profit or loss. We need to refer to the information relating to adventure outfitters, and we have to prepare the statement of comprehensive income for adventure outfitters for the year for the year ended the 31st of October 2024, right? So it's all about income and expenses for that financial year, for that 12-month period. We've got sales, and sales we said will amount to 1,420,000. I will just write it here. It'll be 1,420,000. From sales, I will immediately subtract debtors allowances of 31,940. And then we have to have cost of sales amounting to 740,000. That is done. We have interest on fixed deposit. Interest on fixed deposit is not under operating income, but you'll normally find it at the bottom of your statement of profit or loss. And it's right there under operating profit, which is 2,400. That has been recorded. Discount allowed. That is under operating expenses. It's already recorded for you, which is 6,400. And then we've got discount received of 13,960. And unfortunately here we don't have that. It'll be 13,960. Let me just confirm if that is correct. Well, it is correct. And then we've got interest on overdraft. Interest on overdraft, that will be your interest expense, and it amounts to 4,440 rand. Okay, so that is also recorded. Now I'm done with pretty much everything. I've recorded everything in the pre-adjustment trial balance. I am going to go straight into the adjustments and additional information. Now, the first adjustment says that the maintenance and repairs were done to the shop at a cost of 10,000 rand. And the bookkeeper incorrectly charged this to land and building. I have to highlight incorrectly charged this to land and buildings. We need to correct the error. Normally, to correct the error here, you will take that and subtract it from land and buildings and then add it to repairs and maintenance. All right, so for our repairs and maintenance, you will add that 10,000 rand. Now it says here an amount of 2,874. Just to specify, guys, when you look at your answer booklet, there is no note number 3. So this is basically what is being required, and there is no note number 3. If there was note number 3, I was going to subtract that Lennon Buildings. I mean, from Lennon Buildings, I was going to subtract that 10,000 rand. But the only thing I can do right now is to add it to the correct account, which is repairs and maintenance. And for London Buildings, I cannot do it since there is no note number 3, nor is there statement of financial position. And for adjustment number 2, an amount of 2,874 received from a debtor must be reversed. The amount was originally received in settlement of the account of 3,000 rand. To settle something means to pay off. So to settle means to pay off. So this person paid us 2,874, right? For owing us 3,000 for that. Okay, so now think about it. They paying us 2,874, but they were owing us 3,000 rand. It affects 3 accounts. The first account that will be affected will be bank. We will increase bank by the 2,874. But because this needs to be reversed, it was added to bank when we received it, or when we thought we received it. You will find bank in cash and cash equivalents, and it amounts to 11,220. That means that 2,874 is already in there. It was added. So you do the opposite to reverse it, you just take it out. Got it? And the 3,000 rand was subtracted from trade debtors. So from trade debtors, you subtract the entire amount that the debtor was owing because they paid it off. To pay off, it means they paid off that 3,000 rand that they were owing. We subtracted that, but we need to reverse that subtraction. To reverse that subtraction, we'll have to add back 3,000 rand. The difference between what we thought we received and what the debtor was owing is what is called discount allowed. The fact that this person settled a debt of 3,000 rand, but they only paid us 2,874, it means we gave them a discount allowed, which was an expense expense. But now we cannot incur that expense anymore since we need to reverse the payment. The reasons why we will have to reverse the payment might be because the debtor has insufficient funds in their account, therefore the payment was not successful. So that discount allowed was added to discount allowed as an expense. And how much will that be? Let's see. You will take the 3,000 Rand and subtract 2,874. It means the discount that was added to discount allowed was 126 Rand. Now to cancel the addition, we need to subtract from discount allowed that 126 Rand. We no longer incur that expense because the debtor will not be allowed to that expense due to the payment not going through. That is for number 2. Number 3 says that an advanced survival skills course was cancelled due to poor weather. I am going to highlight that. So this advanced survival skills course was cancelled due to poor weather. Customers were given cash refunds of 2,600 from petty cash. Now, the fact that this was cancelled, it means our fee income was increased by that 2,600. So because the survival skills course was cancelled, we will have to minus the 2,600. The reason we minusing it or subtracting it is because we did not earn that income. We are not entitled to it. And the reason why we are not entitled to it is because we did not provide the required service. So we need to cancel it. And to cancel that is due to the fact that we did not earn it at all. And to refund debtors, we had to take that amount out of our petty cash. So you're going to go to petty cash and minus the 2,600. Good? Awesome. Point number 4. Provide for outstanding interest. Outstanding means that that interest was not taken into account. Even if it was taken into account, not all of it was either received or paid. But because it's interest on fixed deposit, I need you to understand that a fixed deposit is a non-current asset. So interest on an asset will be income. So here we're talking about interest income, and the fact that it is still outstanding, it means it is accrued. But we are going to record it as accrued income if and only if it is not capitalized. If it is capitalized, that outstanding interest will be added to the actual fixed deposit. Okay, so they say here provide for outstanding interest on the fixed deposit for the current financial year. Okay, interest is not capitalized. That's where I said to you, because it is not capitalized, it means that any outstanding interest will be recorded as accrued income. Any outstanding interest outstanding will be recorded as interest income. And an outstanding interest income is called accrued income. Just because they said it's not capitalized, because of this word here, not capitalized, is the reason why we have to record it as accrued income. Otherwise, it was going to be added to the fixed deposit itself. It was going to be added to that 70,000 rand if it was capitalized. But because it's not capitalized, any outstanding interest, we are going to record it as accrued income, and accrued income or income receivable will be recorded under trade and other receivables. It's a current asset. It represents the money that is owed to us. Okay, let's calculate how much is really outstanding. So we've got the fixed deposit of 70,000. So what I'm going to do is to take the 70,000 multiplied by my interest rate, which is 8%. It'll give me interest for the entire year. How much will that interest be? So you will say 70,000 rand multiplied it by 8%. It gives me 5,600. So interest on fixed deposit is supposed to be 5,600. But in this example, that interest on fixed deposit was recorded not as 5,600, but it was recorded as 4,400, and it's supposed to have been 5,600. It basically means that only 2,400 of the 5,600 was actually received. So the one that is outstanding will be the difference. So outstanding fixed deposit will be the difference between that 5,600, you minus 2,400, and this will give you 3,200, which is outstanding. That means your interest on fixed deposit has been understated. It is accrued. You are going to go to your interest income and add it there. So I will take that 2,400 and add 3,200. So my fixed deposit, interest on fixed deposit, can go back to 5,600. And that 5,600 will be written over here. You will write it as 5,600. But this 3,200 here, it is still outstanding. We're adding it because it's income, but we have not received it. Yes, we are entitled to it. It's ours, but we have not received it. And we are going to record it under trade and other receivables. And we will record it under trade and other receivables as accrued income. So my accrued income will be at 3,200. We good? I've done number one, I've done number two, I've done number three, I've done number four. Now I'm on number five. Number five says that stationery costing 500 was ordered and paid for during the October 2024. Well, during October 2024, but was not delivered due to a driver shortage experienced by the supplier. I've got a nice summary somewhere. Um, okay. I don't remember where it is. And this summary shows you how you deal with such things. In essence, when we have paid for an expense like stationery and it was not delivered to us, it means that part of stationery can be stationery, picking material, consumable stores, cleaning material, all the expenses or all the stock we buy, not to sell, but to use within the business. If any of those consumables were ordered, ordering something means you actually have to pay for it. I'm sure you have done it when you go to buy something from McD or Steers or whatever. You normally order it online, and when you order you have to make a payment so that they can reserve that order for you, except for Debonairs. I think Debonairs allows you to go and pay at the store, or you choose to pay at the store for all of them, I think. But in most cases, when you order something, it means you have actually paid for it. And the fact that we have ordered that stationery, it means that amount of 500, it's already in this 11,200. It is in here. However, it was not delivered. It means that when it comes to consumables like stationery, packing material, cleaning material, all of those, we only expense what we have used. So whatever comes to this final column here must be the one that has been used. So if it was not used, it won't be. So used means it is the one that is expensed. All right. We only expense what we have used. Now think about it. If it was ordered but it was not delivered, did we really use it? And if we expense what we have used, then that 11,200 needs to be reduced by what was not received or delivered, because we can't use what was not received or delivered. So this will be reduced by what it will not be used, which is that 500 rand. That 500 rand will not be used because we don't have it. How can you use something you don't have? But we have paid for this stationery. And the fact that we have paid for this stationery and we have not received it, stationery is by nature an expense. It means that we paid for that expense, but it was not delivered. So we're going to put it under trade and other receivables as a prepaid expense. Prepaid expense represents what is owed to us, but it's what we have paid and we have not received, which is what is owed to us. In this case, it will be that 500 rand that we paid, but we have not yet received due to the fact that it was not delivered to us. So when it comes to packing material, stationery that was ordered but not delivered, you minus it from the actual expense and then you add it to prepaid expense. I actually need that handout to show you what I'm talking about. Here it is over here. So this is the handout that I was talking about, okay? And I have a lot here. It's about the sale of goods. I'll come back to that. There's a sale of goods, which tells you how to deal with the sale of goods. And there's part that talks about the return of goods. This is an example. And this is the return of goods. This is the sale of goods. As to which accounts will be affected, which accounts to debit, which accounts to credit. And this is about rand. If it increases or decreases by an actual value, that is the formula you will use. If it increases or decreases by a percentage, this is the formula you have to use. But the one that I was looking for is this one about consumable stores. So for consumable stores on hand from the previous year, you have to add them to the actual expense and minus them from consumable stores. And this is the part that I just used right now. Expenses ordered but not delivered. What do we do with those? You subtract it from the actual expense and then you add it to prepaid expense in trade and other. This will be in trade and other receivables, and this will be in the statement of comprehensive income. That's where you will subtract it from the actual expense, which is what we have done, right? And the one that was not used at the end of this year, you add it to consumable stores and then subtract it from the actual expense. And that's what we have done here. I added that 500 to prepaid expense, but I subtracted it from the actual expense. The actual expense was the stationery amounting to 11,200. That is done. Let's go to number 6. The telephone account for October 2024. October is within the current financial year, which is 1,220, has not yet been paid. The fact that we got the account for October is within the year. You get that the statement of account. If they say you owe this much, it means that is what you have used for that month. But that month falls within the current financial year. It means it is a service that we received, but we have not yet paid for. That amount has not been added to your stationery expense, so you need to add it to your stationery expense, which is 1,220. We're adding it to the actual expense, but we have actually not paid it. It qualifies as accrued expense. Accrued expense is an expense that we have incurred, but we have not yet paid for it. It will be a current liability and it is recorded in trade and other payables. Interest on the loan from Bush Bank is calculated at 15% per annum. Most people ignore the PA. PA means that you have used that. We need to calculate that for the entire year. The loan was taken out. Interesting. The loan was taken out on the 1st of March 2024. Interest must be capitalized. When interest on loan has been capitalized, any outstanding interest will not result, I said will not result in accrued expense. The outstanding interest will be added straight into your loan expense account. Okay. This one requires me to draw my financial year, and it is adjustment number 7. I will write it under adjustment number 7 over here. I need to draw my financial year. It ends on the 31st of October 2024. It means it started on the 1st of November. So I will have here 1 November. Okay, 1 November 2023. After November, what do we have? And then it ends there, right? So it's 2024. And it says we took the loan on which day? We took the loan on the 1st of March 2023. 1st of March 2024. And let me see where March is. March is here. It was taken here. So this loan was taken here, meaning that we've had it for this whole period. Let me count it. 1, 2, 3, 4, 5, 6, 7, 8. So we've had it for 8 months. The interest they said per annum means for the whole year. So I'm going to divide this by 12. And they said interest is 15%. I will multiply this by 15% and take the loan amount from Bush Bank. I don't remember seeing Bush Bank. I think I saw Honey Bank. Okay, so this is wrong. It's supposed to be Bush Bank. And the amount is 79,500. So you'll multiply this by the amount that you took for the loan, which is 79,500. Let's see how much it gives us. 79,500 multiplied by 0.15 multiplied by 8 and divide that by 12. It will give you your interest, which will be 7,950. This is your interest on loan. And obviously, they told you that interest on loan is actually capitalized. However, even if it's capitalized, it means that that becomes your interest expense and you will add it to your interest expense over here. I am simply going to add that 7,950. If it was not capitalized, because this is an expense we have incurred but we have not yet paid for it, I was going to include it in trade and other payables as accrued expense. It's not looking nice, so let me just write it here as 7,950. That is the correct value, right? Is it really 7,950? Let me check. Yes, it is. Okay. We're done with that. So we did number 6, we did number 7. Let's go to number 8. K. Holgate, a debtor. What did this debtor do now? Has been declared insolvent. It means they are unable to settle their short-term debts, right? His estate paid out a dividend of 30 cents in rent, totaling this. This one, guys, it means that this 378 represents the 30 cents. That is the 30 cents. The outstanding amount must be written off. So if 30 cents was received, it means that outstanding amount, let me highlight that, the outstanding amount will be the 70 cents. Must be written off. That's what they're saying. And to write it off, it means that the 70 cents becomes your bad debt. Now, no entries were made. Yo. If they say no entries were made, I will start with the amount that I've been given, which is at 378. First of all, I am going to go to my cash bank and I'm going to, because we received it, we are going to add it. I'm going to add it to my bank. It will be 378 because it was received. You with me? However, this is only the 30 cents. We need to calculate the 70 cents that was not received and must be written off. So we know that it will be 30 is to 70, right? We have received 378, meaning that we don't have x, which is the 70. So to calculate x, you're going to take this and divide it by 30. So you divide 375 by 30, and then you multiply it by 70. And that should give you your x, which represents your bad debts. So your bad debts will be equals to 378,000 multiplied by 70 and divided by 30. So you multiply by what you want and you divide by what you've got. And this will give you your bad debts. Let's see how much that will give us. It's 378 times by 7 and divide that by 3. It'll give you 828. Did I say 828? It's 882. So this is your bad debts. What do we do when we recognize bad debts? We debit the bad debt itself and then we credit debtors control. So that's what we're going to do. I'm going to go to bad debts and add that amount. And the amount that I need to add will be 882. And then I'm going to go to my debtors control. And when I get to my debtors control, watch out. I am going to first subtract that 378, which is the cash that we received, and then subtract this 882, which is the bad debts. Because the payment was not recorded, I also have to subtract it from debtors control. You have to add it to bank and subtract it from debtors control because it is the payment that we actually received. Obviously, reduce your what is being owed to you in this case. The remainder must be written off. That's why this debtor will end up owing us nothing at all because we have subtracted everything. Okay. And then it says here, part of the premises has been let to a tenant since the beginning of the financial year. The rent increased by 10% on the 1st of June. I'm going to put that in the timeline that I recorded here. So when is the 1st of June? Rent was increased on the 1st of June, so it was increased round about here. It was increased here, and it was increased by how much? It was increased by, let me just check. It was increased by 10%. So from this date, it was 10%. So it was 10% for 1, 2, 3, 4. It was the rent for October is still outstanding. So it means that there was no rent for October that was that was received. Yes. So it's still outstanding. Rent is income. Any income that is outstanding will be accrued income. We need to find out how much it is. So this rent was received only for 1, 2, 3, 4. It was not received for October, so I will not add October. I hope I'm making sense here. Okay, so October will not be added because this was not received. It was only received for 1, 2, 3, 4. So it was 10% for 4 months, meaning that it was 100% for 1, 2, 3, 4, 5, 6, 7. So for 7 months, it was at 100%. And that's where you will use this formula that I gave you here. Let me just get rid of everything. Amount for rent in the trial balance, how much will it be? If it's not in the trial balance, you just have to check your answer book. It should be there. Can I go back, check? So if you look in the pre-adjustment trial balance, there's no rent income here. If it's not there, don't throw the towel. Here it is, it's 45,600. So it means that rent for the year, if I have to go back to this calculation, it will be 45,900. Okay, let me check again. If that is true, it was 45,600. Before the increase, we had 7 months. After the increase, we had, you see what I'm using? Months before the increase or decrease, it's 7. And then you add months after the increase or decrease. We counted those months and we said it's how many months again? It was 1, 2, 3, 4. It was 4 months, right? So those months will be 4 months. So I'm going to put it here as 4. But for those 4 months, it was no longer at 100%. It had increased by 10%. And then you just put this into your calculator. Whatever rent you get here, I need you to understand it's before the increase or decrease. Before, guys, before the increase or decrease. Let's quickly calculate it. So in the numerator, I'm going to have 45,600. In the denominator, we'll have 7 plus 4 into 100%. Okay, plus 10%. And let's see how much that gives us. It gives us 4,000 rand. So rent before the increase was 4,000 rand. But you will have noticed that March is after the financial year. So already in this month, rent had already increased. So rent was no longer at 100% like it was here. Remember here it was at 100%. But from this period up until whenever it was no longer at 100% because it had increased by that, it's now 110%. How did I get that 110%? It was 100% before, I just added 10% to that. So that means that 4,000 after the increase, you will have to take the 4,000 and just multiply it by 100% plus 10%. And that will give you 4,400. So it means that rent for October is actually 4,400 and it's outstanding. We are going to record it as our rent and we will add it to rent because it's accrued income. It's outstanding. It was not received. It was supposed to have been received for October, but it was not received. It will be 4,400. But because this represents our accrued income, it will be recorded in trade and other receivables, and we are going to record it as accrued income. It will be 4,400. Got it. Right, let's read the next one, which is I've done up to number 9, I've done 8. The next one says a credit customer. A credit customer is a debtor. I need you to understand that. Oops, returned 3 sleeping bags that were originally purchased for a total of 2,940. Let's just stop there. Let's just stop there. What am I saying now? Let's just stop there. When a debtor returns goods, how many accounts will be affected? Okay, this what I'm going to write. Please don't get confused. It comes from this here. Now, accounts that will be affected. First of all, it will be debtors allowances. We will debit debtors allowances. We will credit debtors control. And all of this will be at cost price. I mean at selling price. This will be at selling price. And the selling price was given to us as 2,914. So when we debit debtors allowances, it means we subtract from sales. And we also subtract from debtors control because we have credited it. So I'm going to go to sales. And when I get to sales, I am going to subtract that 2,000. And then I'm going to go to debtors control. Debtors control, you will find it in trade and other receivables. And I'm going to subtract that amount as well because these goods were returned. And they were originally sold for this thing. Originally cost the customer that much. The other two accounts that will be affected will be your debit trading stock and your credit cost of sales. This means that your trading stock is actually going up and your cost of sales, when you credit it, it means it goes down. But these will be at cost price because we are given the selling price. I'm going to say my cost price will be that 2,940. You multiply it by 100 and then you divide it by 100 plus the markup. And according to this, the markup was given to us as how much? Oh, it's 50%. So I'm going to add 50 here. Let's record it quickly. So you can say 2940 multiply by 100 and then you divide it by 100 plus 50. It gives us 1916. This is the cost price. The cost price will affect cost of sales. So cost of sales must decrease. So we are going to decrease cost of sales by that amount, which is 1916. Can I just confirm that? Yes. At the same time, that represents the return of stock. So your trading stock must increase. So I'm going to go to my trading stock. And when I get to my trading stock, I am going to add that amount, which is 1960. Done. Okay. I hope you guys understood that. Just going to erase it since I'm done. The business uses a markup of that. We've already used that information. On upon investigation, Adventure Outfitters